Hi guys, and welcome to Freckle Finance. I just finished many videos on the basic types of investments, and now that I've got that covered, I thought I would go through with you guys my investment history, or just my saving investment history with you guys. Now, I know that I have mentioned some of the stuff in previous videos, but this is going to be putting it all together in order, in more detail. So a good place to start with this story is that I have always been a very big saver. Even when I was very young, I always saved a lot of my money. I remember getting Christmas presents and I'm like, oh, why don't you just give me money? So my family started giving me money and I started putting it into the bank account and saving it. I probably ended up spending it at some point later on, but for years and years, I just basically saved most of my money. I never wanted to spend my allowance money. So I was just always into saving. As well, it wasn't very hard for me to save because I've just never really been that much of a spender in the first place. However, I had absolutely no knowledge on investing. To me, it was just something scary that some people did, and they must have had tons of money in order to invest, and you had to be rich and all of that stuff. And I basically knew nothing about investments at all until I met my boyfriend, my current boyfriend now. So we met when we were in university, and I obviously, like most university students, had no money to invest. In fact, I had some student loans, but he did have some money in investments, and he was able to kind of go over with me his investments and how it tracked and how well it was doing. And as well, we actually started dating in 2008, which means he lost a lot of money when we first started dating. And I was able to see throughout the years that he gained the money back and then some. So that, a crash, I found out, doesn't have to be the scariest thing in the world. Now, maybe if you're about to retire, that's very scary. But if you're young and you have tons of time to make the money, then it's not that scary because it likely will recover and then some. So when I graduated with some student loan debt. I think it was about $6,000. However, I actually did have more debt than that. I just paid some of it off while I'm in the last year of school because, like I said, I'm very debt averse and I really like saving. We moved in together at that point, and I took about a year to pay off my student loans. And during that year, I spent a lot of time to start thinking about what I'm going to do with my money. And he was there encouraging me to look into investing. He never once said, like, this is what you should do. He always just encouraged me to look up what I should do and to figure out for myself how I want to invest. And actually, like, we don't invest exactly the same anyways. We don't really get into arguments about it or anything. So once my student loans were paid off, I wasn't exactly ready to dive right into the stock market, investing, doing everything all by myself. So I decided I was going to go for a mutual fund. And so I went into the branch near me at the bank that I used, and I went in and talked to one of those financial advisor people, and they did a risk analysis for me, which was kind of unfair because I actually think that he put me as much more less risk adverse than I actually am, which then gave him, I guess, a reason to put me into a high MER mutual fund. So I actually don't remember what my first mutual fund was, but I know the fee was probably somewhere around 2.5%. Yes, that's around the Canadian average, but that's still really high. And once I came home, I was all proud of myself because, yay, I opened up a mutual fund. And my boyfriend was kind of like, that's really high fees, but I'm going to let you do what you're going to do. And then I'm like, oh, he thinks it's high fees. I better look into this. So I actually then further looked into stuff, and I ended up going for what I mentioned before was the CIBC Canadian Index Mutual Fund. I switched to because that had a lower fee of 1.11% MER. When I looked into this mutual fund, it was very similar in matching to the TSX S&P index, as I mentioned in a previous video, is a good one to base your investments off of. So it was well diversified. The fees were lower. The guy at the bank had me convinced, like, he really didn't want to give me this. He was like, it's up to you, but you have to sign all these extra waivers because it's not recommended by us. And I don't know if that's because the fees were lower or because I was new to investing, but they have you so scared thinking that because it's labeled as a volatile mutual fund that it's actually going to be so risky. But really, it's not. It's well diversified. It's got tons of different stocks in the mutual fund that it invests into, and yeah, it's really just not that bad at all. So I should say that I didn't start making money on my mutual fund right away. I actually was in a loss for a while, which it hurts. I was freaking out. I didn't want to invest anymore. I thought this was a waste of time, but I had to sit there. I had to hold it out because you have to experience for yourself some loss and gain to really truly understand how you feel about the market. And eventually it went up. And generally, when you're first starting out with investments, there will be points in time where you will be below what you put in. But the longer you've been investing for, the less likely that is to actually happen. And actually, in fact, when my mutual fund finally did start going up into the positive, it actually kind of just jumped up. In a few days, it just went up quite a bit of money, at least for how much money I had in there. And it kind of sat around there, went up a little bit. Then it usually jumps back down. Like usually the increases and the decreases, at least from my experience, have all been kind of jumpy. So it just sits around the negative, then it sits around the high positive, but generally it doesn't do much in between, and it just jumps up, then it jumps down. So that's something that you're going to have to get comfortable with. That's the way the stock market works, but do not freak out when you lose money. I have gotten really calm with it. I used to actually check like on a daily basis how much I'd made and lost, and honestly that'll drive you insane. So I actually don't do that anymore. But yes, the market will go up and down. That's part of the game. So as well, I think I needed $500 before I could open that mutual fund account. But that's, when I opened up the mutual fund account, the $500 is all I had. So I really didn't have enough money to go anywhere else with my money at that point. Definitely stocks was not an option. That would have been a huge expense for me to buy stocks. But I did start kind of doing more research. It actually has become quite a hobby for me. As you can see, I'm doing videos now. I love finances. Who knew that? I definitely went to school for psychology in the science section. So who knew that I would get into finances? But I love finances now. So since I kind of started this mutual fund and kind of figured out more about it, I started reading websites, magazines, books, blogs, all sorts of things, anything I could get my hands on for finances. And this is still the case. I still like to read books on finances. You will see in a previous video, I did a book review. I have read many other books. So yeah, and from there, and that's kind of where all my knowledge has come from. It's come quite quickly, but I do spend a lot of my spare time reading and learning more about finances. And the more you learn, the more intricate stuff you can learn. And so some of the stuff becomes quite basic. So eventually, when I was starting to research stuff, I learned about ETFs. And pretty much prior to this point, I had no idea what they were. But learning that they're very similar to mutual funds, but on the stock market and less fees, that's pretty convincing for me to just move to ETFs. However, I didn't right away know that there was a way to actually purchase them for free. As well, when you close a brokerage account or you close an account with somebody else, there are fees to pay. So I actually waited until I had enough money for a brokerage to actually pay out my closing fee with, I guess it's pretty obvious because I had a CIBC mutual fund. It was with CIBC, so I closed my brokerage account with, or it wasn't a brokerage account, but I closed my mutual fund account with them, and I transferred all my money over into ETFs. Because finding out that you don't have to pay fees for something and the rates are lower, I mean, you have to pay when you sell, but I've never sold an ETF yet, so that hasn't hit me. And when I sell, they'll be so much higher that it's just overall, it's going to be a heck of a lot cheaper to have these ETFs. So I should also say the only place that I so far know about to purchase ETFs for free is through Questrade. So that is where I have my online self-directed brokerage. Yes, you have to figure out how to purchase ETFs just like you would a stock. It's ridiculously easy. You need to be shown maybe once and you're done. You basically know what to do. So by no means is self-directed brokerage is hard. I have not had much problem. I mean, I had some issues with transferring my money from one brokerage to another, or from CIBC to Questrade, but I haven't really had issues since my money has been transferred to Questrade. So during some of my initial research, before I ever actually moved my money into Questrade in order to purchase ETFs, I saw a lot of discussion on Canadian couch potato, and I will link the website down below. And it's a style of investing where you invest in indexes and you hold them. You purchase them and you hold them, and you don't plan on selling them for a long time. And during my research, I felt that this was a very low risk investment. It's easy. And you know, it still makes quite good money. Maybe it's not the best you can make, but who wants to spend hours and hours and hours more effort to make a little tiny bit more money? I think most people would agree that you wouldn't want to. If you guys find these videos interesting and informative and you want to learn more, please click subscribe, as I will be uploading videos every Monday, Wednesday, and Friday. Have a good day. Bye.